Welcome everyone to the Idaho Technology Council Deal Flow Report. My name is Paris Cole and I'm the Executive Chairman of the Idaho Technology Council and am the CEO of truckstop.com. And on behalf of the Idaho Technology Council, I want to welcome you today and are so glad and grateful that you could make it. I know that with these challenging times, we had to pivot. Normally we like to do this event live, but are grateful to be able to still have it and do it through this virtual event. And so grateful that you're all able to make it. We have a number of wonderful things we want to share with you today, but before we do that, I want to just speak for a minute about the importance of capital. As we try to continue to grow the knowledge economy here in the state of Idaho, capital becomes critical to that growth. As any entrepreneur knows, capital is essential to growing their business and to making that initial investment to see their product or their idea blossom. And so we're really grateful to be able to have and to report on the growth of capital investment in the state of Idaho. It's something that's important to all of us as business people. And it's important to all of our people. This is how we create jobs, is through the capital that is raised. And so really, it's important that we keep track of this and monitor the amount of capital coming into the state and that we can promote this, because there are a number of wonderful events and a number of wonderful transactions happening in the state of Idaho that I think many people are unaware of. And so as we continue to promote growth and investment in the state, that then will attract more investors and will further help businesses in the future to attract and to grow their businesses. It's also important as we think about capital, it's also important to recognize where we're at in the state of Idaho. That we've come a long way over the last decade, and we continue to attract new investors to the state. We continue to attract new entrepreneurs and new ideas. And with each passing year, it's amazing to see where all of these ideas and all of these capitals come from. At the beginning of each year, we often wonder, well, what's going to happen next year, and how are we going to see new ideas or new investments into the state, and aren't sure how that happens. But inevitably, there always are both a number of large deals as well as many smaller deals. And so we're just incredibly grateful for what we've been able to create here in the state, and look forward to sharing with you what's happened this last year in 2019. And also some of the things that we're looking forward to in 2020. So with that, I'd like to turn the time over to our first presenter, Andy Scoggin. Andy, take it away.
Okay. Thanks. I'm having a hard time hearing everything that was said before, but what I did hear, I was excited about. I'm really grateful to Idaho Technology Council for sponsoring everything they're sponsoring, especially during this time when we're having a hard time being all together. So this is, these kind of gatherings help to keep us moving forward, which is a phenomenal thing for our city, for our state, for our region. So thank you to them, Don Day, and Boise Dev, and all the things that they're doing. So let me speak to you in my short time about what's going on with Albertsons. Some of you might have been at a presentation I did earlier in the year where I talked more about kind of the history of some amazing entrepreneurs in our state, the Skaggs family and all the companies they founded, part of which became Albertsons and Safeway, and the coming together of them. And a lot of it was entrepreneurial and operational. Today, because this is the Capital Connect event, what I really want to focus on more is kind of capital events that have happened with one company that was born and grew up in Idaho and remains committed to having our headquarters here. And that's going to bring us to the recent capital event that happened actually yesterday with Apollo Management, Global Management, which I've heard of, and I'll bring that. But I want to get through the capital part of our journey, and I'm really trying to speak to two audiences that I hope gain something from this little story about what we've been through in the last 14 years with the Albertsons company. And that is, I want to speak to entrepreneurs who are here, but I also speak to those who are investors, who are investing their capital in companies and maybe have some principles or ideas that might be applicable there as well. So everything I'm going to provide to you is public information, which is, I just say that right up front. There's a lot that's going on behind the scenes, but this is all come out in either 10Ks or public press releases or otherwise that you would have seen this. So take you back to June 2nd of 2006, almost exactly 14 years ago. Albertsons had put itself up for sale, and there were about 1,900 grocery stores, and about 2/3 of those were bought by a company out of Minneapolis called SuperValue. But about 1/3 of those stores, or about 650 of them, nobody wanted because they were in terrible shape. They're losing a lot of money. They're kind of spread out across the country. And a group of 5 investors with a company which some of you have heard of, Cerberus Capital Management Private Equity Group, as the lead investor, but there were 5 investors tied into this investment group consortium that made the investment into buying the junk, the stuff nobody wanted, the broken stores, the losers. And they put in $300 million into, which is total cash investment. So the thing I think that's principle there, the risk. So they have investors taking a risk on these broken stores, not a single investor. So principle, spread your investment risk with 7 months before they eventually put their $300 million, at risk. And and what happened 9 months after that June 2nd event tells you that well, and we worked with them as a management team to wrap that due diligence together and decide on the investment amount. So $300 million initial investment for 650-ish stores. Almost immediately, we had an offer for 180 of those stores in Northern California. Worked through that deal, and within June 2nd, starting our little company, Albertsons LLC, we solidified a deal to sell what were the most difficult for us to turn around anyway. We weren't excited about the Northern California, probably the leading losers, but there was a local company, family company, grocery company that really wanted them. They paid us, investing our $300 million, they paid us $590 million just for those 180 stores. So do the math, the double, and we were able to return that to our investors, and those of us as well participate in that. Key to that deal, very first big deal we did, was that we required that the buyers put in a job guarantee for every employer. They fought that for about a month, but eventually they put it together. They agreed and actually took a small cut in the total purchase price in order to get that guarantee for our employees. But we protected them, and most of them, now 14 years later, those employees retired, are still. So that was a great message for us. Fast forward over the next 7 years, from 2013, we continued to improve operations, dramatically improved in a lot of areas. We also sold different parts of the geography, again, with promises to our employees to protect them and focus on keeping the strongest operating areas. 7 years later, turned about $2.3 billion investors on the investment. We had a very, very profitable but smaller but very company operating. that's when we trust you. We really and look at how we can take this model and something that can really deliver. So they took their 2.3 billion and reinvested it essentially with some leverage, with significant leverage, to buy back the rest of the Albertsons from SuperValue, and then next, about 2 years later, to buy the Safeway company all together, and took us about 192 stores to 2,300 stores over a 2-year period. So, dramatic growth. But keep in mind, 100 million turned into 2.3 billion. They put the 2.3 billion back. So think about it again. All of this was done with an investment of 300 million. Now let me take you to today. The investor group, including management that own equity, together Apollo Global Management, one of the top private equity groups in the world. We really, worked hard with these guys because they are tough, they're smart, and they due diligence the heck out of us. And they our board of $1.75 billion to buy 17.5% of the company at 10 years. So 300 million. No, today investors, our group and our team, being worth $10 billion. So that was a huge vote of trust to start a company, but it has paid off. We now have 10 billion. So then the question comes with this: do this? Why not just take this company to an IPO? We're doing well. We're doing very well. Company, by the way, I should say I retired from the company March 1, but I have a role working with the CEO on a retained basis, very involved in events. So why do this? 3 strong reasons. Apollo deal before an IPO occurs. One is Apollo is one of the top, private equity groups in the nation, maybe in the world, certainly in the world, and they've been very active in the retail grocery space with some other investments over the last several. So, to the market sends a very strong message of confidence, a vote of confidence that they decided to put write a big check to invest in this particular grocery company. So, B, for us, a strong benchmark, $10 billion equity company. So, big vote of clear benchmark of value. Those of you who have been companies public and this call have or transaction, one of the biggest challenges is pricing, because you got to convince the market of price. Well, if you have somebody who knows this space, who bargains hard and puts a price on, then you've got a price that's out there. And third is that Apollo, by buying almost 20% of the company and gaining board presence, part of that, now has put their skin in the game, because the market knows that these guys are going to drive in their investment and take it very, very. Third is that if you're buying into this in a future IPO, you're buying in with the knowledge that you've got people or really going to drive value in this company as well. So that kind of leaves the last question, IPO, and I can't answer that question, but I can public knowledge is we've filed an S1, we've kept that active. It's an odd time in the world, all of us know, but it's time for grocery companies, and I think it will be moving forward in the 3 to 5 year time frame as far as we can see how we'll be able to kind of know Albertsons and how the strong management team group support to have pretty good next 50 years are going to be just as good. That Boise-based, Idaho-based company be a place to grow this and build it. So thank you. Have a great rest of your time. You're about to hear from yours coming up here, and I'm excited to hear her speak as well.
As you know, this is our 5th year collecting and assembling data with the primary purpose of showcasing success stories in Idaho, continuing to bring investment to Idaho, and giving the data to the community because we believe data is power. We intended to have a big celebration event for our 5th year of releasing the report. As we all know, things are a little different these days. So we've got some people presenting from home. My partner and I, Blake, are presenting 6 feet apart in an appropriately socially distanced area. And we are ready to present the data to you guys so you can see what happened in 2019 and as we all look ahead to see what's going to go on in 2020 and beyond.
Yeah, it's pretty great for Andy to already highlight a $1.75 billion deal for 2020. So thanks, Andy, for telling that story, the Albertsons story. You know, I recently saw that on a Forbes list, Albertsons is listed as the 3rd largest privately held company in the United States. So, you know, right here in our backyard, and that story is playing out as we speak. So it should be exciting to see the IPO. Well, with that, let's get into the report, into the data. You know, this is our 5th year that we've been doing this. It's kind of crazy to think that 5 years ago we started this project and thought, well, if we could just start tracking what's going on, maybe that could be helpful for Idaho. And it turns out it's been a great thing. So thanks to the ITC, Holland and Hart, HP, our printing sponsor, when we print the report, hopefully in the next few months we can print it and get it into everyone's hands. But for now, 2019, so let's see, $4.4 billion of deals that we tracked, 154 deals. As we've always said, this isn't everything. This is capturing a fraction, maybe 60% of the deal flow. It's hard to know exactly what it is. So again, a big shout out to the community, to the network for sending us the deals, for participating with us, and for the companies that are doing great things right here in Idaho. Next slide shows kind of the way it's looked over the last 10 years. Our deal flow, we actually go back to 2010. We don't know exactly how accurate the deal flow was back before we were really going hard at it, but we do see a general trend line here in the number of deals that's starting to move up a little bit. And obviously the volume, transaction volume by year really is heavily influenced by the publicly traded companies here in Idaho. So IPOs, our publicly traded companies and our larger companies out acquiring new companies, etc. So this was a great year in a lot of ways. The 1.65 billion from 2018 to 4.4 billion in 2019. That's really a story of the activity of our largest companies out in the M&A world. So let's see. So again, 87 private placements this year, 66 mergers and acquisitions, and we had one public offering, $400 million public offering. So
yeah, we always try to graph to give a picture of where are these deals happening in Idaho. Northern Idaho continues to be led by Kootenai County. The majority of the deals that happen in Northern Idaho are happening up there. Then I think we go next to Eastern Idaho. And Eastern Idaho continues to report strong deal flow. Obviously, our population centers will report more deals, but we had 27 total deals and $85.8 million in deals in Eastern Idaho. Then we got Southwest Idaho up next, which continues to lead the data, which is not a surprise given our population center, and that Ada County continues to throw up the biggest deal numbers. They had 86 deals just in Ada County alone. The total count and volume was 99 deals and $3.6 billion value. And going back to what Blake said, this is reported deal size. So we know that there are a number of large private deals that were rumored to be big dollar values, but we did not include those in the report unless it was verified by either the company itself or publicly available data that we could rely on.
Yeah, big shout out to, I think, Payette County. Isn't that where truckstop.com is centered? So Payette County, if that deal reported to be around $1 billion with Iconic, that would have been a pretty big number. It was undisclosed, so we're just going off of some reports and some rumors. But little Payette County had a couple $100 million transaction last year, so that's pretty exciting. All right, next, private placements. Another strong year. 87 deals that we tracked. Just over $500 million worth of deal flow. And we just wanted to highlight a few of those deals and what they look like. So, some of these that are exciting for me, ClickFunnels is probably a really big company that we haven't been able to report yet in the deal flow. This is the first year that there was actually in the VC databases a transaction, about $1 million transaction with ClickFunnels. I mean, this is a large company. If you look in some of the reports, I mean, this is a company that probably is doing over $100 million in annual revenue, and a large technology company centered right here in Idaho, doing great things. And so good to see that. And then a few companies that are early stage, so PlexTrack, Washi, some of these smaller companies, Killer Creamery out there doing their, currently looking to do their Series A, and a handful of these companies that are really getting primed for Series A momentum. And then some of those that have been out raising for a few years, VisitPay and AppDetex, All Social, what a great story here in Eagle, Idaho, and what they're doing. So, just really, really great to see these private placements that eventually become the medium-sized and large companies in Idaho. So, and again, we're counting Vacasa, the big Idaho presence. They had a $300 million funding round last year. Then, COVID hits. I think we all saw what was going on with a lot of layoffs with Vacasa, and great to see the last week that Vacasa raised another $100 million plus round, and hopefully that means some of these jobs are going to come back. So it's just, I think the startup community, it's doing some great things, and just love to see these private placements.
Next, we cover the mergers and acquisitions. Number of deals, total was 66, which was pretty close to on par with 2018 with 69 deals. Total dollar size was $3.35 billion. And again, these are publicly available data. We expect that the total dollar size is probably larger than that figure. We had a lot of really good M&A activity last year. Our public companies were active, including Boise Cascade and PetIQ and Micron. US Ecology had some deals both on the private placement side where they were investing, and also M&A acquisitions. So we love seeing that kind of activity. Those really drive the total dollar value in the M&A market. And we had some really exciting private company acquisitions. And we heard from Paris Cole, who's involved with the ITC, and we heard him talk last year about the truck stop deal. And you're going to hear from Black Sage today, telling a really exciting story about the company they built and eventually ended up selling, and how they pivoted as a company. So we had a really great year in 2019 for M&A activity, and it'll be interesting to see how 2020 fares. I think that a lot of companies are seeing some opportunity buys. We're watching companies pivot. Some companies that didn't have the traction before, moving to the work from home environment has created a lot of traction with a lot of our tech companies. So it'll be great to see what happens in 2020.
Great. So we had one public offering. $440 million deal, and this was actually a spin out from another publicly traded company. So Pennant Group, involved in senior living and in that industry here in Eagle, Idaho. So great to see another public company coming in to the state. All right, so deal by sector. Again, technology and software leading the charge. 38 deals, which represents about 25% of the deal volume. But also just like to see the diversity across the industries. And I think that speaks to just the overall Idaho economy, and I think that's great. Deals by industry across time. You can see that technology and software has kind of slowly made its way up to the top, and that's I think bodes well for what we want to see across the state, is this diversity, but also like are we staying current? Are we staying relevant? Are we attracting jobs of the 2020s? I think that's really happening in Idaho. So, all right. Again, the deal flow report this year, we decided to highlight some of the resources that are helping to build Idaho companies, especially on the early stage. So just a shout out to these groups that are providing capital, providing resources, and really doing their part to build the Idaho ecosystem. So, and then 50 to the A, Allison.
Yeah, so we teased this initiative of 50 to the A immediately before the COVID-19 pandemic. And what 50 to the A is it's a big, hairy, audacious goal. We want to see 50 companies make it to their Series A financing, starting measuring at 1/1/20. So any company that makes it to a Series A after January 1 of this year will be celebrated. We got some feedback, and people said 50 companies to a Series A, that's kind of aggressive, isn't it? And you know what, it is an aggressive goal, but we feel optimistic that we can make it happen. And what we did when we started hearing some of this feedback, we took a look back at some of the companies that received their Series A funding or Series B or C or later stage funding to show that there are companies here receiving funding that would constitute a Series A funding. And we intend to celebrate these companies as we continue to grow the ecosystem here and see people growing awesome companies and growing our workforce and helping the community by doing so. You'll hear from a company that we're really excited to announce as one of the first 50 to the A companies later in this panel.
Yeah, that's so exciting. I mean, that in the middle of COVID-19 and everything going on, a little Idaho company is making waves, out raising capital, and announcing that Series A funding today. So, that this is just a great day for Idaho to see that happening, especially with where we are. And everyone says capital's drying up, and is there any money? At the Albertsons deal and the Tackle deal, I mean, those are showing that for Idaho companies, there's still capital and we're still succeeding. So congratulations. All right, I guess with that, please, another shout out to the community. Send us your deals. I mean, we know people are just reluctant. They don't want everyone to know how big of a deal they had or how much money they raised and all of that. And we appreciate that. As Idahoans, I mean, we understand that, there's something that we're going to do it our own way. And so I can appreciate it, but I also can say that your data and the data that you send us from across the state is helping us to build that narrative as to why companies should continue to start, grow, and thrive right here in Idaho. So send us those deals. All right, with that, send it over to Mike. Mike with StageDotO.
Well, hello, everybody. This is Mike Self with StageDotO Ventures. Just like to send a thank you out to everything that the ITC does for the community. Having organizations like that as a stalwart in the community. Just it makes it really easy from a venture perspective to be able to come in and help fund companies. So there's three things we're going to hit on today. First, I was going to chat a little bit about the overall venture environment. I know folks are a little concerned about whether or not there's capital out there, and with all the dislocations we've seen over the last few months. Secondly, I'm going to hit on the environment in Idaho specifically. And then lastly, talk a little bit about what we have going on at StageDotO. So starting off with the overall venture environment, first, when we talk about the venture environment, it's really changed over the last 25 years. Venture 25 years ago was really described of companies from ideation to about a $200 million market cap. Today, I think most folks would describe venture as from ideation to anywhere up to 5, 10, 20 billion, depending on how big of a company you're growing. The companies are just staying private longer. So I think we need to understand that and differentiate that. There's a big difference between a $5 billion privately held company and a pre-Series A company that's growing. And so one of the characteristics that happens in recessions or periods of dislocation, however you want to describe the environment we're in, is actually capital heads early and it heads late. And if you're kind of somewhere in between there, where you happen to have a really big burn rate, a lot of head count, you're probably more at risk. I can tell you that over the last 4 weeks, we've had Series A and Series B investors actually reach out to have conversations about our early stage deal flow. And that just intuitively makes sense. Are you going to write a $50 million check to try and save one company? Or are you going to write 10 $5 million checks and help early stage companies that are more lean and mean and just earlier in their life cycle and help them grow into becoming larger companies? And there's really two types of companies. I know folks that there is a little bit of a perception of venture companies are out there with really big burn rates and spending money and a little bit of the wild, wild west mentality. But we really break it down into two different types of venture-backed companies. One, the first kind is one that has an underlying business that if they cut back on spending, marketing, growing, have a profitable business. And we call that kind of top ramen profitability. And those are the companies that, especially in periods of dislocation, tend to attract capital, right? So you're spending for growth. You're not spending to try and figure out what your business is in. It is actually and try and figure out a business plan by spending. And that's the second category. And those are the types of businesses that really get exposed in a period like this. And so we stay laser focused, obviously, on companies that we believe can grow from day one with a backdrop to be able to get to profitability in a relatively short period of time, if the company so chooses to. And then you can turn around and not worry about the viability of the company, but more focus on any capital that's being spent as a growth driver to be able to get market share. So I think lastly, the thing I would say about the overall venture environment is that there's always capital for great businesses. In a free market, the capital goes to where it gets treated best. When there's excesses, that gets blinded for periods of time. And so certainly the water's gone out and we can see who's naked and see who's not. But for real companies that have a real business plan, this can actually be fairly refreshing. And so that's been the point of our perspective. I would say, if anything, this period of dislocation may not last as long as maybe some of the others, where we've been into a 18 to 24 month non-induced recession. But we'll see how all that plays out. So moving on to kind of the overall environment for Idaho itself, we've been in Idaho for about 18 months. And for some of the folks that have been on this call that we had talked to, we had a general thesis around the Boise, Idahos and the state of Idaho, for example, as really being able to attract entrepreneurs and capital over the next 10 to 20 years. And that some of the bigger tech hubs, it was just starting to become cost prohibitive, let alone quality of life and other factors that we for our business, we felt like it made sense for us to see Idaho, and we thought that trend was just starting. I would say that because of COVID, it's been accelerated. I think that there's some folks that have been in the major tech hubs that thought, well, geez, maybe I'll go to a smaller region to start my company, run a distributed workforce, but really, benefit from all the great things that other ecosystems have to offer. That has absolutely accelerated. We have entrepreneurs that have reached out to us from the major tech hubs, knowing that we're in Idaho and want to start having conversations about starting their companies there, or at the very least having exposure to Idaho. So both positive and negative trends have been accelerated, and so we think that when the dust settles, that what's happened here and what's been exposed is going to be extremely bullish for the region. Now, one of the things that I also think is going to get accelerated potentially, that we need to think about as a state and as a region, is really the fight for state income tax streams. No one's really talking about it right now. What's the cause and effect of, say, a Facebook letting their employees move to wherever they want to live? But I'm pretty sure that the state of California isn't going to want to give up that state income tax revenue. And so it's going to be interesting to see how states either work together or don't work together. I can tell you one solution for us in Idaho will be for us to fund and build our own company and have companies incorporated in the state. And I think that over that trend over the next 5 to 10 years, as things become more distributed, is going to be something that we're really going to need to think about and start to have active conversations. So when there's initiatives like 50 to the A, those are really important things for us to rally around that can really have an outsized effect on the entire state. So lastly, I'll just move on to StageDotO. First of all, for the folks that don't know what we do, we're an early stage venture fund. We work with approximately 10 companies at a time. And our goal is to get an entrepreneur from ideation, commercialization, MVP mode to funded with a high quality Series A. So that gap has been growing wider and wider and wider as traditional venture funds have grown larger and larger in size. And so that's the problem that we're solving. And we think that fits in really well with where Idaho is and the ecosystem. And we're really excited to be there and to have our strategy in Idaho. We'll go over kind of our first portfolio, which was distributed. It was in a lot of different tech hubs, but we're just completing the second Series B out of the 10 companies. We're in market for 3 Series A's, and we've had 2 acquisitions. So we feel like our business model has really been validated, and then we're off to a really strong start in Boise. So we've funded 4 companies in Boise. We wrote our first check in May of last year. The 4 companies are PlexTrack, Crave, FlipRide, and Syndro. And as of next week, all 4 of those companies will have gone from ideation to commercialization. They will have all monetized, which is pretty amazing in a 12 to 13 month time period to be able to say that. we really give the credit to our entrepreneurs in the ecosystem. And when folks say, well, what can we do in Boise, Idaho? Well, I can tell you that we've done more in 12 months with those 4 companies than we did, in 18 months in our first fund. Just the speed that we've been able to get to market, and we're just so happy to be in the region and to be able to help companies get to the Series A. There's over a 90% chance of a positive liquidity event if you can get funded at the Series A these days. And so we're just excited to be in Boise, and we have 6 more companies to go in this fund, and we're actively looking. And I would say, lastly, I'd just like to thank some of our earliest investors, and United Heritage and Alturas and a couple other family offices that out of the chute really supported us and really got the flywheel going. We couldn't be any more grateful. And as things open up here, we're really excited to keep sprinting. So thank you guys for your time, and looking forward to the great success in the region.
Thank you, Mike. Thank you. Boy, we've got a great event. Hopefully you can hear me. Can you hear me? We got lots of moving pieces here. Dylan, if you could turn on your camera, we've got a good panel here. I think it's been a good event so far, with people spread out. I think, Mike, you're in Phoenix. Is that right? And yeah,
I'm actually in rainy Seattle, Don.
Oh, well, you're even better. I lived there for just long enough to know it rains more than my taste, but you get to go back and forth, so that's nice. So, but we got people spread out all over, and I think we've had a good event so far. Thanks to Blake and Allison and Andy and Paris, who we'll hear from again in a minute. But I want to bring in our entrepreneur panel, and Mike's going to stay with us throughout this because he's involved in one of these companies. But let's introduce the rest of our guests here, who I think are going to tell us some great stories as we go along. The first one right there in the middle is Dylan Woods from Tackle. He's got big news to reveal today. Hey, Dylan, if you could center up your camera just a little bit so we can see your whole face, that would help. All these tech things, you do it in person. You're not worried about cameras and lights and mics and all those things. We also have Dave Romero from Black Sage. They got acquired last year. Is that right, Dave? Last July. And so there's big news there from Dave and his folks. And then Shannon Blomker over at Crave. As Mike just mentioned, they obviously got some funding from StageDotO and just launched. And I just tried it last night. So we'll talk about that. It should be a really fun 20 minutes or so. And we are up on Facebook. And if you ask some questions, I will try and ask the panel that. And we're doing a lot here, making sure the audio works and everything. So ask your questions and I'll go to that. But I want to start with Dylan. And Dylan, I talked to you earlier this week for a story that we just published on BoiseDev.com about 3 minutes ago. Tell us your big news, sir.
Yeah, thank you. So it's a tough time in the world to celebrate, but at Tackle today, we're really proud to announce our Series A financing. And so our financing round was led by Bessemer Venture Partners out of New York, and they've been supporting us for a long time. We're really happy to partner with them, and we were able to raise about $7.2 million.
That is a big deal, and obviously we'll be in the Idaho Deal Flow report next year as we go along. And tell us a little bit, you had a conversation along with your CEO and your director of marketing the other day, but tell people who might not be familiar with Tackle and what you offer to the world and what your value prop is.
Yeah, thanks. So we want to make it really simple for big software companies to sell their products in the cloud. And so what Shopify has done to allow B2C companies to sell their products, to create a storefront and to sell those online, we want to do the exact same thing for bigger software companies. So we're really honored to work with companies like GitHub, PagerDuty, New Relic, to allow them to sell through Google and through Amazon and through Microsoft. So we partner with all those companies, and we represent about 160 different software vendors.
Yeah, and obviously this is a pretty significant deal, and a lot is going to the cloud, a lot is going to Amazon, AWS, and we talked about what's this funding going to help you do, and what's the next tackle?
Yeah. Yeah. So we really want to continue to expand our product offering. We think that there's a whole market out there that we're just not able to address yet. And so we're going to invest a lot of the money in our product. We're also going to take a really measured growth strategy over the next year, and expand other things like our sales and our marketing team. So we're really excited just to get to the next stage of growth and to hopefully open the door for a whole new set of companies.
Yeah, and, it was interesting listening to you talk about kind of your employee model, and it seems to dovetail with COVID. Tell everybody at home how your workforce works and how that's become an advantage.
Yeah, so we founded Tackle back in 2016, and since that time we've been a remote first company, which means our employees are free to work from anywhere. There are quite a few of us who are located in Boise, but for us, for me that means I like to work from McCall. For my partner, it means he likes to work from Riggins. So we like to take advantage of the whole state of Idaho and allow people to do that. So when COVID hit and people started working from home, we were able to hit the ground running. We kind of just hit a speed bump and kept right on going. We didn't really lose any productivity on our engineering teams, and we were able to keep sales strong. The biggest place that we've been hurt is in our workers who are in dual income families, and so they've had to make a lot of adjustments to take care of their children and take care of their families. And so we've been able to get creative to allow them to work different hours, to work on the weekends, to do different things to still get the job done, but allow them to take care of what they need to do.
Yeah, boy, it is an interesting time, and we'll bring the whole panel in later, and we'll talk a little bit more about COVID and kind of some of the implications for that. I wanted to bring back in Dave and Shannon, and I think it's just such an interesting time in the world, in capital, and trying to launch things. And Dave, I want to go to you because you you're self-funded. Is that right? Yeah. Oh, you know what? I got to unmute you. There you go.
There we go. Basically, since July of 2014, we've been self-funded up until the acquisition this last summer.
And then, so tell me about that acquisition. Obviously, that's a pretty big event in any company, and tell us what led up to that and what the process was there.
So, I mean, you go through a lot of phases, as an entrepreneur and as a small business. And in our industry, we've got a lot of exposure to risk because of all the complexities surrounding defense. And for example, we deal with a category of regulations called international traffic in arms. And there's certain types of equipment that we sell that are critical aspects to being able to stop drones from operating in protected airspace, like jammers that both in the US and internationally, these things come with significant controls, which means going through the US government to get approvals. And if you make a mistake, if you file the paperwork wrong, you thought you did it right, the penalties are, they basically start at multiple millions of dollars. And so we're looking at the growth of the company and the level of individual exposure that my partner and I had, and knowing that one mistake could really harm a company that a lot of people have invested their lives in, and you start to look at it from a lens of responsibility to your investment, to the investment of your folks. And that was one of the key reasons why we decided to go through that acquisition, was to take some of those existential risks off the table. And I think everybody, my partner and I, we're both really glad we did. It's been a great learning experience. It's been great for the company.
Filing taxes or handling a PPP loan, know how complicated it is to work with the government. I can't imagine the order of magnitude harder it is for something like this. Tell us a little bit about your product and what it does. You touched on it there briefly, but explain what you do.
Yeah, so we actually started off, my partner and I, doing highway animal detection on a grant, and there was actually 3 of us at the time, and we just had this idea of how to solve a problem using radars and thermal cameras to be able to detect and classify vehicles and animals, so that we could help avoid collisions by turning on flashing lights. There wasn't a there. It was a great application. There was, we couldn't see a real good angle to approach that market. And we took what we did and basically pointed it at the sky, and on a premise that, hey, maybe we can do this for drones, get a radar detection, try to automatically classify it, is it a fixed wing? Is it like a DJI Phantom, a quadcopter? And it worked. The basic core technology, it worked for that application, and we've been building ever since, and all the way till now, where we're just now getting into what's called integrated short-range air defense. And so we have jammers that can block satellite navigation systems on drones. They can block operator communications. We use radars to provide the precise 3D position of basically all moving objects within a certain volume of airspace. We use thermal cameras and computer vision to be able to basically see hot objects, day or night, and be able to distinguish, the thing from a bird from a drone. And we layer all of these things together, and this is what we now sell to, government customers. Like this last year, we had our first project with the government of Oman, and at the very end of the year, we closed 2 of the world's top 3 airports. All these systems, because they're integrated, they're a little bit bespoke, but they're all kind of derived from a foundational product, which we call Sawtooth.
So there's a lot there, really interesting stuff and technology, and kind of fun to see from an Idaho company. This airport application, I think, is maybe interesting to people. I think we've seen news stories about drones near airports and some of that. What's the product being used for there?
Yeah, so airports, it's a slightly different consideration than the counterterrorism, which is the case for a lot of our military customers who have. So there's drones flying in with dangerous payloads like explosives and chemical weapons. It's not hypothetical; it's real, and it's happening in a lot of parts of the world. But airports, it's really a matter of protecting aircraft from collisions with unmanned systems. And there's lots of radars in place at these major airports, but they don't have the ability to detect really small things. And so you've got situations where, whether nefarious or not, you can have drones flying, in this manned airspace. And so for airports, some level of situational awareness, both of the big things that are flying, that are holding passengers, and the small things, which also includes birds. That's another kind of tangential application that our system can do. We don't advertise it, but it does provide that level of awareness for those types of customers.
Boy, it's such an interesting idea, and you guys are executing at a high level. And so bringing Dylan and Shannon back into the conversation. And what I'm struck with, I can't take credit for putting this panel together, the Idaho Tech Council. It was fun to dig in on each of your businesses and learn a little bit about what you do. And I think what I like here is that we have such a diverse mix of businesses, right? We've got Dylan working in the cloud. We've got Dave, who's working in literal clouds, I guess. And we've got Shannon with a cloud kitchen. And I did not plan that string of puns there, I promise you.
Nice job.
But Shannon, let's talk about Crave. I mentioned I tried this last night, and it was really a great experience. Tell us what you're trying to do there. Oh, Shannon, you are on.
Okay, can you hear me now?
Yeah, I can. Yep.
Okay, great. So first off, I'm super impressed with Dave and Dylan's companies. I mean, that's way over my pay grade to even understand. We feed people.
Mine too.
So at its heart, Crave is a food company. So we have a large commercial facility, houses 16 different restaurants, and has an employee force that takes all of the menu items from all of those different restaurants and can combine them and deliver them to anybody throughout Boise, Eagle, Meridian. And so it's largely a distribution-based business, but it's super exciting because it's a way to bring high-quality food dishes to people who really want to appreciate them and who don't necessarily have access to them right now. So we have restaurant partners from Seattle, from San Francisco, from Raleigh, from Miami, from LA, all over the place. And we bring them here so that, they're employing people here on the ground in Boise and, making their incredible dishes. And then we employ the drivers so that it shows up exactly as those chefs intended it to show up. So we think it's a big differentiator in the food space. And we're super excited about being able to have our flagship facility here. It's almost done. It's out at 10 Mile Crossing. And, we couldn't be happier about having StageDotO be our key investor as we got started on this. We embarked on it last May and are very excited that we were able to pull together kind of a quick launch. And we launched June 1st. And I'm so glad that you enjoyed it, Dom. The response has been incredible. People in Boise have come out in droves to really support Crave, and they love what we're doing. They love the restaurant partners. And so we're pleased as punch with the whole thing.
So we'll talk about the offering a little bit. I'm going to slide Mike Self here to the conversation since his name was mentioned. And Mike, when you're looking at businesses like Crave, what made you think, boy, this is a place that we'd like to put some capital and try some things?
Well, we're gonna sound like every other venture company out there just for 1 second. But first, we do look for companies that we think have the opportunity to become $1 billion company. And the reason for that is because the Series A and Series B investors, that's what they look for. And so we kind of have a saying around the office that we don't invest in things unless we have a pretty good idea of where that next check might come from. So that we felt like Crave was solving a really big problem, not only for the consumer, but also for the chef. And so, the team was just laser focused. First of all, it's by practitioner, for practitioner. So both Scott across the country and then Barry in Boise were practitioners and had started restaurants. So really understood what the pain point was of using third-party delivery. And really Crave's mission is to aggregate well-known brands that really care about their brand and care about the customer, and be able to take away those pain points from delivery, which is
we got a little breakup with Mike's signal there, so we'll bring Shannon back in and talk about
actually.
Technology, right? I'm actually going to mute Mike. Hopefully here in a second, we're just having a little connectivity issue with Mike. So, but Shannon, you can probably pick up kind of where he left off there.
Yeah, absolutely. So one of the big differentiators that we talk about is this vertical integration model. So bringing on the restaurants as partners, the chefs as partners with us, and really having them all housed in the same facility and owning everything from the consumer app, their first experience, their encounter with that business, to the marketing is all controlled by the same facility, to, the drivers that are employed by us, the fleet of cars that deliver the food. So, everything is controlled so that the consumer experience is exactly as the chefs intended. And, I know you're going to get into the COVID thing at some point, but this has really been a shock for a lot of restaurants who found such a huge vulnerability in their business models. And when they look at what we're doing with Crave, it's a massive differentiator for them, because they can still make the food that they love making for their consumers and enable themselves to get it to that consumer without having this huge disintermediation with the third-party delivery apps that they're currently experiencing, where they're handing off this creation and they have no idea what's going to happen to it between there and the consumer. And same thing for the consumers. Really just don't know who's responsible for which end of the building and the delivery process. So that's been a huge thing for us to be able to bring to the restaurant community, and the COVID situation has really highlighted that. So we were glad that we were able to bring some of our restaurant partners in. We just brought 4 of the 16 in for this kind of mini pop-up while we're still finishing our larger facility. And we're doing a sort of dinner-only light service right now so that we can get something out there for these partners and for the consumers. And like I said, just to give Boise a taste of what's coming.
I think that kind of was the piece of differentiation for me, having tried it last night. We're all familiar with the delivery services. I was talking to a restaurateur, a couple of months ago for a story, and they decided to kind of do what you did, and they decided to launch a cloud-only restaurant. But they were delivered through the third-party apps, and their plan, once the pandemic kind of go bricks and mortar, and he emphasized to me, like, hey, I hope you'll try us on the delivery services, but don't judge us completely by that, because we can't leaves our door.
Exactly.
I was struck with last night with Crave, when I tried it, the food was probably the hottest it has ever been. And I live in like East Boise, like almost to Highway 21. And the food was hot. And I'm not used to that, even if I order close to me. And I don't know where your kitchen is based, but I was surprised at that. So it's interesting to see that change in the model and how that kind of works.
Well, and hopefully you also experience the uniform drivers and the car and everything. So I think it is a whole big complete package. And our tagline is elevating expectations for food delivery. And we hope that's really what we're doing. So the plan is to be, here in Boise. Like I said, this was our flagship facility. To be able to build it out at 10 Mile, we're super excited. That's going to be a game changer for us, just in terms of having this purpose-built facility where everything is designed exactly the way we wanted it to. And then hopefully bring that business model across the U.S. so that we can bring the same kind of quality food delivery to the rest of the nation.
It is interesting. We're going to bring the whole panel in here again. And if folks have questions, you're watching Capital Connect 2020 here with the Idaho Tech Council and Boise Dev. You can put your questions if you're watching this live, of course, on Facebook. If you're watching it on tape, well, I can't predict that, so that won't work. But if you're watching us live here, go ahead and ask some questions. I wanted to talk to each of you a little bit about the impact of COVID and sort of the change in our time and our economy, and how each of you are adapting. And I'll open this up to any of you. We got Mike back on the line. Anybody who wants to jump in here on how your businesses are adapting?
Well, I'll start. I mean, for us, a lot of the ways that we were generating leads in our business was by going to in-person events. A lot of these big cloud providers, they have these huge conferences, and so we would go there to generate leads. And so we had a large marketing budget that allowed us to do that, and allowed our sales teams to do that, and all of those for the canceled. And so for us, one of the ways that we've had to adapt is to change our sales strategy a little bit, and to figure out new ways to generate leads, and ways to do some of those events online, like this one. And so we have been able to make that transition, but it's been a tough change for us.
Yeah, I bet. I think everybody's kind of dealing with how you pivot and adjust. And Dave, what about you? Obviously you were acquired, and that brings some things into the conversation. How are you kind of trying to figure out what to do here with so much change in the world?
Yeah, well, I think first off, Dylan's company's setting an example that the rest of us, I think, are all looking at very closely in terms of working from home. We did remote workforce for a couple of months, and I think we saw a significant productivity uptick. And I think you can go in cycles where it's valuable to have face-to-face meetings, make key decisions, and then once those decisions are made, the plans outlined. When it comes to execution, having that protected, quiet place at home, it's been really valuable for a lot of folks in our company. In terms of impact, from a sales and ops standpoint, operations standpoint, I have a handful of international customers that we're delivering for, and some of those countries have had travel bans where the airports are completely shut down and still shut down. Some of the countries in the Middle East. So that is basically pushing these project deliveries out to the right. And so we've had to accommodate that in a number of ways because that does affect cash flow. But overall, I mean, we're managing fairly well.
So I think probably maybe the biggest pivot here has probably been Crave. You guys weren't going to launch until later this year. How did you get up and going so quickly?
Somebody else asked me that just recently, and I would say I think the success is down to things like our investors, right? So having people like StageDotO who have depth of experience, our founders have experience, it's not anybody's first rodeo. And so it really enabled the whole team to say, well, now what do we do? And so, and there were solutions in place. Whereas I think if you were a new founder or a new entrepreneur and you're faced this massive business challenge, you kind of look like deer in the headlights. So I think that the experience of the team really is a testament to how we were able to turn things around so quickly. And to be honest, I mean, the COVID situation with everybody at home under lockdown, unsure about when they're going to go back to normal life, unsure about whether their people feel comfortable going to a restaurant. I mean, this sort of played into our hands. So it was an opportunity for us more than a need to pivot. It was a chance to come to market. And I think we were really grateful for it.
Yeah, I think you guys all tell great stories, and I love the diversity of what's going on in Idaho. And I think that the Idaho deal flow shows that and is just so diverse. And Blake and Allison lined that out. And what's great about this is we're going to hear from Paris Cole. He's going to wrap us up, but we're wrapping up early for people, so you can go on and do some other things. It's always nice when things take less time versus more. I want to thank everybody. We'll thank the panel here. Dylan Woods with Tackle, Dave Romero with Black Shage, and Shannon with Crave. Thank you all for being here, and thank you for making such a great
Thank you.
Yeah.
Thanks.
Good luck.
Thanks, Boise Dev and ITC. Really appreciate you guys.
Yes, absolutely.
Thank you, Dylan.
Thank you. And I want to give a shout out here before we pass off to Paris. I want to give a shout out to Blake Hansen with Alturas, Allison Johnson with Holland and Hart, and Gina Borud, who is our producer here for Boise Dev. Appreciate everybody. And boy, what a great day and event. And just hearing about all this, I think makes us all feel like there's great things to come in Idaho. And that's it for me. I'm going to pass it off to Paris Cole, who with Truck Stop, who's going to wrap us up. Thanks for joining us, everybody.
Thank you, Don. What an amazing panel. It's so great to see Idaho companies growing and blossoming, and to recognize all of the great things that are happening in our state. I just want to thank all of you for, again, joining us today. We're so grateful to have you here. Grateful for your interest in the knowledge economy here in the state of Idaho, and grateful for your willingness to recognize what's happening in our great state and to be a part of the technology community. On behalf of the Idaho Technology Council, I want to thank all of you. I also want to thank those that participated today, our panelists, our presenters, and thank all of them for a great event. I'd also like to recognize our sponsors for this Idaho Deal Flow Report and our Capital Connect Conference. Those are our Alturas Capital, Holland and Hart, and BR Wealth Management. Thank you to our sponsors for putting on this wonderful event. I'd also like to recognize the wonderful work of Blake Hansen and Allison Johnson in putting together the Deal Flow Report. We wouldn't be able to do this without their support. So thank you both, Blake and Allison. Finally, I'd like to let you all know that there will be an extension of the Capital Connect conference in October. So please stay tuned. There will be more information coming as we get closer to that date, but want to have a live event if we can, and so more information to come on that. So please stay tuned. So thank you all for your time today. We really appreciate it, and so grateful for all of the great things that are happening here within our state and within our technology community. Thank you all, and have a great day.